Crypto markets have been on a bit of a roller coaster ride over this past month. And in fact, you could even say that they've been on one for the whole year. And this question that keeps popping up is, were cryptocurrencies in a bubble? And that's a question that you may actually struggle to find a clear answer to. It's really difficult to assess the situation without having some level of bias involved, since really it rides on to what extent you think that cryptos are the future or not. Some people think that even the highest peaks that we saw were undervalued compared to what cryptos should be at and what they're going to be contributing in the future, while others think that this revolutionary view of cryptos is probably a bit overstated and that those rises that we saw were too much too soon. So let's start off by looking at what actually defines a bubble. According to Investopedia, a market bubble is defined as a rapid escalation of market value and is typically driven by exuberant market behavior. So let's say that we stick with that definition. If we look at some cryptos, and for this we're going to pick on Bitcoin and Dogecoin for these examples, then I'd say that they could have been fairly described as being in a bit of a bubble according to that definition, particularly Dogecoin. I mean, when people react to the drop in the price of an asset by asking Papa Musk to tweet something, tweet anything, you've got to think that the rise was largely irrational. That doesn't mean it was irrational for everyone involved, but there was definitely a significant percentage of people that did fit that criteria. And the price movements over the past month have definitely been a wild ride, a rough hold for any hodlers out there, even those with the biggest diamond hands. So let's say that it was a bubble. Well, with Bitcoin and Dogecoin falling over 50% from the peak, does that then mean that the bubble has popped and that these currencies are now in a bear market? Typically, a major market such as the S&P 500 would be defined as being in a bear market when the price falls more than 20% from the previous high amid widespread pessimism and negative investor sentiment. So with Bitcoin and Doge falling over 50%, I'd say it is possible to say that the bubble has popped and that they're now in a bear market. However, how long that bear market is going to last is very difficult to say because these wild swings with cryptos work both ways. It isn't always just negative. But unfortunately, when it comes to bubbles, all it takes is a small prick to pop them. And in this case, a lot of people are pointing the finger of blame at Elon Musk as being that prick, so to speak. Now, Elon is obviously a pretty outspoken individual. He's not afraid to make rash comments on Twitter, even if they do land him in a bit of trouble. Not exactly a unique thing these days for people in positions of power. Now, personally, I love Elon. I think he's an inspiration. And I actually find his tweet escapades pretty funny most of the time. There was the time he falsely tweeted about Tesla raising private funding. There was the bizarre situation with those kids in Thailand. Yeah, probably not the best strategy to call someone a pedo publicly, especially when they're trying to save kids' lives. But just like Trump, this bold approach to Twitter has become a bit like Marmite. People either love it or hate it. And whether you like it or not though, Elon has become worshipped for his bold approach among many retail investors. And in particular, he's become the proud idol to the Wall Street Bets community, which has obviously been going from strength to strength recently. And, while Tesla have done some amazing things, I don't think it's too much of a stretch to say that a large reason for the share price performing so well has been down to the cult of personality around Elon Musk. So with that much influence over retail traders and markets, it may not be so surprising that he has been the catalyst behind many wild swings in crypto, both positive and negative. I mean, look back at January this year. He simply added the hashtag Bitcoin to his Twitter bio and the price jumped 20%. Then a little bit further along in February, prices jumped 16% when it was revealed that Tesla had bought $1.5 billion worth of Bitcoin. Now, obviously, there will be other factors behind these big moves, but it's clear that he is a catalyst of some sort. How much direct effect he has on the movement of prices is difficult to say because it's not possible to isolate the impact that he has as a market mover. But whether serious crypto investors like it or not, he is kind of becoming the daddy of Bitcoin, like a sort of social media influencer on super steroids. And with great power comes great responsibility. So just because he can make cryptos explode to the moon, this doesn't mean that it's a favorable thing to do, because it also means that he can cause the price to come crashing back down to earth as well. And that's exactly what happened earlier this month when he tweeted that Tesla would no longer accept Bitcoin, citing environmental concerns. Not exactly the worst reasons from a company that's trying to accelerate the world's transition to sustainable energy. Now, some people might argue that the decline wasn't entirely a reaction to Tesla's position, and more that it was highlighting a wider issue that many other businesses will have as well. It was basically creating more friction for the widespread adoption of Bitcoin. But whatever the reason, it resulted in some pretty serious declines across the board. But Musk can't take all of the blame for this. I mean, many traders were buying using leverage, which obviously meant that they were being forced to sell their positions when they couldn't cover their margin requirements. At the end of the day, it doesn't matter whether you have diamond hands or not, because if you can't cover your margin calls, you're going to be out of the position. You know, it sort of reminds me of back when I was naive young Nicholas investing in penny stocks back in the mid-2000s. And I'd go onto these bulletin boards, right? Because we didn't have this nice fancy social media back then. And you'd get these sudden declines in the price of these small cap companies that you were holding. And that decline in price would end up escalating as people panicked. And on the bulletin boards, we'd all be discussing it and we'd call it a tree shake. And we'd justify it as the weak holders being shaken out of their positions, therefore leaving the serious investors with the diamond hands holding on to their positions, which would mean that the next move up in price would be much more sustainable because we wouldn't have to go through any tree shake that's going to cause the price to decline so quickly. Now, that might end up being the case here with cryptos, or it might just be that that was one of many excuses that you give yourself to justify the fact that you've just become a bag holder. Who knows? In any case, what tends to happen is that as more institutional investors get involved in an asset, the price movements start to stabilize a bit. Rather than there being a large part of the holdings made up of investors who are jumping on the bandwagon and have no real view of the fundamentals, you have a more stable investor base, and that makes the asset less sensitive to wild declines based on relatively small news. But of course, as we saw in all markets last year, there's still always major global news that can cause wild swings no matter who's holding the assets. And cryptos were also hit with that sort of news, or at least news close to that sort of level recently as well. The Chinese central bank said that cryptos couldn't be used as a currency and that banks and payment firms would be banned from using them. So I'd say, in my opinion, overall, yes, I do think Elon has had the power to be the catalyst that popped the crypto bubble, but that may actually be a good thing overall for cryptos. I mean, ultimately, cryptos need widespread adoption, and the price movements will stabilize with the more serious investors that are involved, and that will help to encourage this widespread adoption. And when I talk about serious investors, I don't mean the people who just got started within the past year or two and have suddenly become crypto experts, because as they say, everyone's a genius in a bull market. So the fewer bandwagon type investors there are who are going to react to every move the price makes, the better it will be for the stability of the market, and that will lead to someone like Elon Musk not having such a big impact on where the price goes next. Now, there's plenty of institutional money heading into the crypto world. We just have to look at venture capital firms and all the investment going into the back end and infrastructure side. So while the short term for cryptos may now seem uncertain, I think the long term is looking brighter than ever.